All right. Happy Monday, everyone. Good morning. 8:35 a.m. Prices of BTC currently at 87.37. There's a lot to cover in today's analysis, and specifically, all right, if you look at the rundown of my points, I specifically wanted to talk about this one today because it's really been bugging me since this morning, exactly how I position myself in trades. And I wanted to show you guys, I often don't show my losses, but today I wanted to show it because it was such a foolish mistake. I mean, I don't often say, there's foolish mistakes done in the market. And I'm not, someone who's professing that I'm one of the greatest traders. And I always say that, I am human and that I am fallible, right? And I will make mistakes, whether it's today, tomorrow, a year from now, whenever, right? But this mistake, it really bugged me because, last night when I went to bed, right, I had a clear outline of a plan that I had laid out, okay? And I'm trying to figure out why I didn't, you know, play according to that plan. And I'm going to show you guys exactly why I didn't and how sort of my ego or my bias got to me, okay? And maybe you can learn from my mistakes, right? And obviously, as someone who's the lead analyst and sort of the leader of this community, I want to show you guys how you can avoid these pitfalls of these human emotions that kind of take control and let you focus on your bias and unable to see what the market is showing you, okay? And how you need to be able to escape that, right? So first things first, what I want to do is, yesterday we were obviously shorting, right? And what was happening was price, okay, so yesterday at this particular point, okay, price was at this particular point right here, hitting this 85.75, bottom of this trading range right here, bottom of this purple trading channel right here, right? And so obviously, statistically, this was actually a pretty good trade, okay? The fact that I shorted this and I had my stop up here somewhere, right? Where was my stop? 86.05. Okay, and so you can see right here, right, as price was approaching this area, price was at 85.66, and I shorted and then placed my stop around 86.05, 86.06, or something like that, okay? And what happened after that was, the stop loss got hit, right, after a couple of hours, and, it actually did not break through with convincing volume, but after that, what happened was, you can see, the following candle right here. So this is the candle right here that stopped me out, I think, just a hair above. And then this candle ripped through everything, okay? And so what happened on this candle was this high volume movement, right? And what I failed to recognize, okay, and this is where I'm going to start pointing out my flaws. I'm really not sort of a insecure person. I personally think it's healthy to look at oneself from an objective lens, especially if you're trying to win at the game of trading. Okay, it's almost imperative that you do look at yourself from a critical lens. Not too critical, but critical enough where you're aiming to improve. Okay, so the point is when we started seeing this breakout right here, right? This was a pretty convincing high volume break through the microstructure that was holding us down, right? And typically, right, what you really want to see is when you have key resistance levels, you actually want to see high volume breakouts through that level, okay? All right, 1 second, there's a question here, okay? All right, okay, no question. Okay, so anyway, so what you see on that is, pretty high volume movement through the level, okay? You typically don't want to see a high volume level approaching a level, right? So, high volume movement approaching a level. So for example, if you note this volume right here with this movement, right at the middle of the EQ right here, this is not what you want to see, okay? These are often traps that are setting you up like this right here, and then price sells off, $400, $500, $600 down, right? But when you start seeing levels that have been laid out for you as key resistance levels, such as this one right here, around $8,500, $8,600, $8,575 or $8,600, and you see a high volume break through that, and then we come back around, right, retest that same level as support, okay, which was again laid out in my plan last night that, hey, I want to see this area tested as support, and I want to go long here, okay? And I didn't, all right? And this is where my ego started to come in, because what I started to see was, hey, I have an opportunity to short this thing right here, okay, this area, which was not a check mark till just a couple of hours ago. It was actually a X right here based on the fact that it had not been broken, okay, this area right here. What was really happening was price was approaching that area right here and it got rejected, right? Only over the last 2 hours or so did we rip through that area, okay? Again, you can see pretty decent volume right here, okay? Right through, smashing through this area. And notice we even came down, retested that same area pretty close to that support. So what typically happens, folks, is when you get high volume breakouts through a key resistance levels, you know, what the bots and the algorithms will do is they will quickly flip that key area right here into support. So whatever and whoever is selling that area, right, if they're trying to push prices back down inside this range, the bots will, you know, very quickly defend this area, okay? And this is why we start seeing, you know, key levels like this being tested as SR levels really fast, okay? Typically in the next couple of hours, right? It's because the bots and the algos are doing their job of saying, hey, we're done with this area. Let's flip this thing into support and let's keep, you know, marching on, okay? So that's essentially what's happened so far, all right? We are now at 87.50 almost, okay? And now we're approaching another key area, which was resistance. All through these check marks that you see, these were all X's before because they were resting liquidity for shorts, right? And yesterday, I even told myself, okay, and you don't have to believe me or not, but I even told myself that I wanted to buy this right here because this was a consolidation and I wanted to buy this as a long. But I didn't because I was too fearful of the fact that, hey, what if we just approach this green box right here, tap it as resistance and then sell off? See, my job often should not be to predict, right? And sometimes you often forget that because what you're trying to do is become a fortune teller. And you don't need to be in the market, especially when it's giving you clear signs of consolidation under resistance, which is this green block, okay? And again, the reason I'm telling you this and the reason I'm explaining this to you is I sometimes, you know, want to explain how you fall into the trap and the mindset of becoming egotistical in this market because you think that you know exactly what the market could do, right? And then you often fail to look at exactly what the market is telling you what it's literally about to do, okay? Very two important distinctions, right? Because number one, the former is you trying to predict what the market is going to do in the future. And the latter is the market is literally trying to show you that consolidation right here under resistance often leads to a breakout. Statistically, this was a good trade for a long. And we didn't take it because, again, we got into the business of thinking that this could be a rejection. That's not our job to predict, right? I mean, obviously, one could also make the argument the other way where we could say that, well, you know, it was consolidation, but we didn't get a breakout until much later. Fair, right? But again, if you were a betting man, I mean, this was actually a very good trade to take because what you clearly see is a pennant essentially right here forming like that. And it led to a nice breakout. So even if we didn't buy the building of the pennant, we should have bought this candle right here, but we didn't, okay? Anyway, I don't want to reminisce too much upon it, but what I do want to state is that, you know, it was a mistake on my part, right? Not buying the retest. And now that, you know, prices are up a good, you know, $200 above from our, what should have been our buy-in, it's a mistake that we can now move on from, okay? Which is the second part, what I'm trying to explain is that, you know, you will often find yourself in this market where the market will trick you, okay, or make you think that you know exactly what the future is going to hold, but you really don't, okay? Once you get into the business of, you know, trying to predict the future, there's going to be chances where you're going to be wrong, and you're going to be wrong pretty big, all right? And so what we do is we simply just say, you know what, let's just chalk it up as a loss and let's just move on, okay? So while we did make the mistake of not buying this as a long and a nice retest of this key level right here, even flipping this green box from, this was all demand right here, right? And this was support, 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 broke through, used it as resistance right there, and boom, ripped on through, and now used it as support, right? Even though we didn't get to buy this area down here, what we do get to do is buy a nice retest of a high volume, high conviction breakout right there. Okay, and I'm gonna show you exactly why through XO charts too, okay? The only thing that you need to learn about XO charts for this particular video is that number one, this is the key footprint of the delta of asks and bids, okay? Meaning that if you look right here, you can see there's a $92 million sign right here, which is in green, okay? Over here is negative 2.6 million, right? This is just stating that in this candle, and by the way, this is an hourly chart, okay? In this particular candle, okay, and I'm gonna show you guys exactly what candle that is. That's this candle right here, right? XO charts, all it really does is it lays out, a good foundation of how the candle looks in each little block and level in terms of a price of the candle. So if you look at this candle, right, what you see on the right side is the bids, meaning the people buying. And on the left side is the asks, which is the people that are selling. If you look carefully, what you see is pretty high volume movement of bids all through the price, okay? Starting from way at the bottom right here, okay? Around 86.13 all the way up through. If you keep moving up, everything that you see is green bids that are significantly higher than the ones on the left, which are the asks. And this, okay, all the way up to where the candle closed, right around this area, was a clear winner for the bulls, because what we have is a $92 million positive volume delta for the bulls, meaning that they put in $92 million to essentially liquidate the short positions and push the price up past key levels right here, okay? This is a pretty high convincing breakout. And I'm gonna show you guys exactly why, okay? So if you pay attention to this 92 million that we were looking at, I want you to look to the left, okay? All across for the last several hours, several days even. Let's put on the 4-hour chart, okay? So 4-hour chart, this is a plus 76 million positive delta, right? All through the left, okay, what you see is the last highest figure was this movement right here, $72 million, okay? And then before that, the biggest sell was this $111 million candle right here, okay? That is this candle right here, okay? This candle right here, okay? And so when $111 million was sold in this candle right here, we couldn't even put in a lower low, okay? So what that tells us is, and again, this is something that we'll learn over time, right? What that tells us is, excuse me, someone was clearly, right, absorbing even all this selling that was happening. And all through the push up, notice how the positive delta keeps increasing right there. 2.1 million, 13 million, 26 million, comes down again, 12 million, 6.5 million, 55 million, all the way up. Okay, so someone is essentially players, whoever, right, is obviously absorbed a good amount of the supply down here, and they're ready to now push up the market, okay? This was also something that really bugged me, is that I did not do my due diligence of buying that breakout of, $84.50, $8,500 right at that point, right? Where I showed you earlier, where this consolidation was happening, okay? So all these things, bug me to a point where I'm starting to realize that, okay, now I need to break away from the mistakes that I made and rectify and essentially move forward in the market and say, you know what, I'll chalk that up as a loss, and now let's move forward, okay? So where we are in terms of the microstructure of the market is that, number one, we had a pretty high volume convincing breakout above this 86.83 marker, which was this wick, okay? Now what we're facing is this key resistance right here, which remains with this black X. That is where more liquidity sits for short positions, okay? So if we start seeing a good push with more volume coming through that area, I'm fairly confident that we could get to that first marker, which I discussed, is 88.28, which was the 4-hour SR level, right? This marker right here that you see. So this was key resistance, resistance, and then the bots flipped that into support, support, and boom, we went up all the way to about 91.50, right? So if we do start seeing pretty good high volume push through that, the first level that I would look to take profit is 88.28 because that is a key SR level, okay? So you may want to consider that as an area for you to take profit in terms of your long positions, okay? And by the way, we are long right now, okay? Again, not investment advice, but again, you know, these are the mistakes that I now see that I made in the market, and 2 short positions in a row have now yielded me to believe that, okay, the market is, you know, obviously set to break up a little bit higher, right? So we are long, okay? So now going back to the chart, all right, we can map out that 88.28 level, okay? Now, if we break above that, I'm fairly confident that we can get to where these candles close right here, and that's around 91.50, okay? I would probably say that if we can get to 91.50 or anywhere close to, let's just say, you know, $9,075, $9,100, I would not be surprised if we push higher, okay? But I also have kept in mind my ABC count, which is the fact that if we were to have a larger correction and a larger retracement, right? If we map that out from there to here, okay, so let's pull that out. Notice where the 618, 65%, which is the golden pocket, sits right now. It is exactly where the 88.28 is. That is the golden pocket where price could print all the way up here, create a lower high, and then sell off for a potential lower low down here as per the swing, okay? So that is also something to keep in mind, all right? Because if the count is, you know, this is your 5 up here, all right? And so let me lay out the count first, okay? So let's put the volume away, all right? And now let's start doing some Elliott Wave analysis, all right? So if this is your wave 1, 2, 3, quick 4, and this is the top of the 5th, all right? Then we have, all right, an ABC. Okay, so your A, your B, your C, okay? All right, and now we lay down the Fibonacci retracements, okay? So if we do it from the bottom of the 1 to the top of the 5th, all right, notice that we were very close to bouncing off the 382 level, okay, from this bottom to this top, okay? There's another way we can make the argument that this was a 1, 2, 3, 4, 5 structure, which is that we could pull it from this being the wave 1, okay? So let's just say, you know, let's see here. You know what, let me delete this and let me start a new wave count, okay? So let's just say this was wave 1, 2, 3, quick 4, and top of the 5th, right? So then our retracement changes, right? So now we have it like that, okay? So if we are to say that if this is the start of the wave count 1 through 5, okay, the B wave should be coming up, okay, between the 5 and the A, all right? So this is gonna get a little messy, so bear with me, all right? So again, B wave comes out to the 618 to 65% right there around 88.20 all the way to about 88.50, right? Which matches up with our 4-hour SR level right there, okay? So that could be the B, and then the C could stretch all the way down to that golden pocket, which is around 77.50 down to about 76.75 right there, okay? Now, this is not something that I'm saying that has to happen. For all I know, you know, if this is the 5 waves up, we could have finished off A, B, and the C would have been right there, which is also perfect because it's the 382 level of this movement from 1 through 5 right there for the C, right? And like I've said before, it makes me feel much better buying an asset on the retracement that bounces off the 382 right there and then keeps pushing up rather than pushing down all the way to the 618 retracement and then gets ready. Because at this point, because it's retraced so much, I don't know if this is going to hold. So I have to essentially wait, for it to climb above 50% or the 382 level and then figure out, okay, looks like this 618 to 65% golden pocket has held, and then I would go long. But the fact that if we are to assume that this was the start of the count and this is essentially where we bounced off of the 382 level, right? This would be a perfect long, even if we got in a little late. Because if that is the long and we are starting a new count, right? And say the new count starts here, okay, if this is the one, we get a quick pullback to a 2, maybe to retracement of $8,600, $8,675. 3 could be up higher, breaks past this level or even touches that level. 4 could be a quick pullback, and then 5 could stretch out all the way up to $9,500. And by the way, this could all be, okay, part of a larger wave count, which is this could be your 1, this could be your 2, your 3 is just starting up, and your 3 could take us to about 10,500. Your 4 retraces back towards, maybe $9,400, $9,500, right? And then your 5 wave could take us to about $12,000. So remember that Elliott waves are typically waves within waves, right? And there's no single way of saying that, this has to be the wave count, or we are in the primary versus the microwave count. There's many levels to it. I mean, if you look over here in terms of Elliott waves, like that. So let me show you guys, right? So you go to the settings and you go to style, you'll see the degree right here. There's many different wave counts, okay? There's micro, subminute, minor, primary, super millennium, etc. right? These up here essentially are maybe 5, 10, 20-year cycles right here that you want to focus on, okay? All right, so I hope that makes sense that, like I said, the bounce off the 382 was obviously, a very good in terms of structure, very good bounce, okay? And by any means, this is a good area for us to consider longs on. But the fact that we have levels waiting above us that are holding us down as resistance still makes you consider that there could be, another, like I said, A, B, C retracement. I'm sorry, I don't mean to go that deep. So A, B, C somewhere down here, okay? And if we get to the C somewhere in this area, that also stops out these positions down here. Again, we don't really have to, but something to keep in mind that, you do not want to be just aggressively bullish and longing because, that the structure is really not as clear as most people think, okay? Are there any questions so far? And is this session helping? Or is this just me ranting on about the price action? Let me know, okay? Let me know if the session is helping. All right, perfect. Okay, so now there was a question about the monthly, okay, that Travis had, and it was a very good question. I'm going to show you guys exactly where that was. I think it was on this chart right here, right? The monthly chart. Okay. Maybe it wasn't this chart. I think it was this chart right here. Okay. So Travis had stated that if we look at this bottom right here, that was around $3,100 or so, and this high right here, don't you think that this was a perfect golden pocket bounce? I mean, this is 100% a very good, sort of detection of this. We've spoken about this being a pretty good area for us to bounce up and away from, okay? And I do think that it is very possible that this could be a bottom, right? That 618 could be, this golden pocket could be the area where we start bouncing up from. But, here's the thing, right? we have yet to, number one, clear the highs of at least this candle closing right here, right here. That's number one. And number two, if you want to establish the fact that we have now created a higher high as per the previous, lower highs in the market, right? Here we go, okay? So let's go to the weekly chart over here, right? And this is something that we've spoken about before. The only way sort of to do that convincingly is that, you want to be above this key high right here, this lower high right here, okay? That's 10,350 on Bitstamp, typically around 10,500 on most other exchanges, okay? So if we were to assume that we're going to push higher above this, then we are in the clear and we are definitely starting our next bullish leg, okay? But until then, I mean, the market is still saying that this was a high, lower high, lower high, lower high. And for all we know, as per this lower high, this could also be the lower high. I've also stated that, when we started seeing this movement up, we went from bearish to cautiously bullish, right? So I'm not of the opinion that, I think that prices have to go down now here. But it's important to keep in mind that we are not in the clear as most people think, that we're not going to just start breaking past, 10,500 or 11,000 or 12,000, okay? Then again, markets break key structures like that when they actually do, right? So our job is to sort of, play it from level to level until we're in the clear. And that's essentially what we've been doing so far. If you are, a position trader that tries to establish a trend in the market that is showing you clear signs of bullishness, this is not where you go aggressively long, okay? This is where you trade from level to level, like we had been over here, right? We were shorting from here down. We took shorts from here down here, and then we started longing, right around 8,000 all the way, or $8,200 all the way into 9,000. And then we went short a couple times, over the last couple of days. And now we're considering going long again, right? So the point is that, you want to be a position trader in this market above this area, okay? Until then, you want to trade level to level. And like I've said before, if you are trading level to level, right, going long right now, in my opinion, was probably, the better bet, okay? I would probably figure that we're going to face, some decent resistance right here. But if we've ripped through these stops and these, I would not be surprised if we break through this by the end of the day or maybe even tomorrow, okay? The only thing that is a bit, scary to me is that we still have that fairly decent sized gap, $40, $50 gap below us, around 85.50 or so as per the CME. And so, that's obviously a $200 drop from where we are right now, right? But again, doesn't mean that the CME markets have to reverse price right now. It just means that it's something to be cautious about, okay? So anyway, point is that, it's now time for me to at least start being bullish from this level towards the 4-hour level, the microstructure of this area, this key SR level towards 88.28. If we start getting above that, then I'll start targeting, that 91, 91.50 area, okay? Until then, I'm still a bit careful of calling this, the end of this retracement. Once we start getting above, say 9,200, obviously I think 9,500, 10,000 is definitely possible, okay? But until then, I'm very cautious of, this being a B, and potentially a C leg down that may be coming up, okay? Markets have a way of really tricking people and fooling the crowd in the best way possible. And this is why, you pay me the money for helping you figure out what's happening in this market, right? Which is that what we're seeing is, not a aggressive bullish bias, but still a cautiously bullish bias, okay? All right, so let's take some questions. Travis says, should our bias start to change if we were to close above 95.50 or the wick high? So the overall bullish bias undoubtedly should not change, in my opinion, above this high, okay? For all I know, I mean, you know, this entire structure, by the way, is still supply. So anywhere in this, price could still get up into and then still reverse. Okay, so we're not in the clear until we break this key high. Okay, if you are someone who likes to just only simply trade candle closes, you know, obviously a daily candle close above this area right here, $95.50, $9,600 is a very positive sign, but there's also so much selling that happened inside these three wicks right here that you see. It doesn't make me feel comfortable saying that just a daily close above this area is enough, right? Because a lot of volume actually did go into this area, you know, so it's no surprise that you want to, you know, be in the clear above this marker. Okay, I hope that makes sense. All right. Positive Vector says that almost, he said he's mentioned this in the chat. I'm worried about the volume as compared to the past runs. It all seems like a liquidity hunt. You mentioned the XO chart volume, but looking at the Coinbase volume and Bybit, Bybit is climbing higher, but with modest volume. Okay, so let's take a look at that. All right. So let's see here. Okay, so yes, you are, you know, sort of right in that regard, right? So if we start looking at even BitMax volume, okay, and this is again another reason why, you know, we are cautiously bullish, right? Because you can see over here, volume is going down, right? And from this point on, right here, this breakout right here, price has gone up pretty decently, okay? Now, just to sort of caveat and show you guys, you know, a devil's advocate point of view, okay? So as you approach this key supply right here, all right, even in this big structure, I would not be surprised if the volume is going down. Because remember, consolidation, all right, even in this big structure right here, often leads to volume going down as price approaches key areas of supply like that, okay? That's exactly what you want to see, which is consolidation in this right before this macro structure, you know, approach of supply. Okay, so I am not convinced that this is completely a bad sign, but it's a sign nonetheless that you want to be careful and cautious to be looking at. And so, like I said, you know, we want to be cautiously bullish and be trading level to level. And this is why we are trading level to level in most of our analyses. You know, I never said that, you know, I'm going to, you know, buy in this area and then just hodl till 10,500. We traded from this area, or I'm sorry, this breakout right here into key supply, which was this box right here, right? Did we hold? Absolutely not, right? We sold right up here. We sold our longs, okay? So the point is that, you know, even though we are cautiously bullish, we are well aware of the supply above us, and we also are aware of the structure that's been building out, which is this key low put in, higher low, and another potential higher low, right? So trading from level to level has been quite beneficial for us. Okay, so also on the 1 hour time frame is regular bullish divergence, which is outside the 70 level on the RSI. So should we see a recent retrace, couple that with a CME gap? Yeah, I mean, again, yes. So like I said, right, that the 88.25 level is definitely an area where you would want to consider taking profits. Unless we, you know, just high volume smash through that level and come retest that same level again as support, then I would just, you know, be bullish all the way towards 91.50. But like I said, I'm probably going to take a good chunk of profit right in this area. Okay, my average entry right now, by the way, is 87.15 or 87.20, somewhere around that. Okay. Let's see. Let's check out the divergence. Okay. Let's see here. Not this chart. Let's check it out over here. Let's see. Okay. So this area right here. Okay. Yeah, so this is some divergence right here, right? So what positive vector is saying is, this is that higher high right here and a lower high as part of the RSI. Okay. However, I would be careful because we still have about 49 minutes left in this hourly candle. So if this RSI ticks up really fast, really hard, and we get above this 77.24 level, then that divergence is excluded. Okay. So just something to keep in mind because obviously this candle is not closed yet. All right. Let's see here. 1 hour Stochastic RSI is starting to approach overbought levels. That would be actually the perfect storm, smash into that 4 hour SR level right here, 88.28, cut through those stops and then sell off, for that perfect Fibonacci retrace of, that golden pocket from this high to this low and back into that golden pocket. So, we go from this high to this low, back into the golden pocket, which is this area right here, and then sell off for that C wave, okay? But again, I am not, convinced that we have to go down yet because the fact that we've stopped out so many shorts on the way, we'll see how we approach 88.28, So that remains to be seen. But again, I really like the fact that the 4 hour had a really nice breakout volume, the $76 million breakout. And obviously, like I stated earlier, the volume has been consistently building and increasing on the way up. The only thing that I did not like was the significant drop off in volume over here. Overall volume right here, 14 billion contracts over here for the last week versus the 21 and 22 billion, and then negative delta of $88 million for the last weekly candle. And just as, even if you don't look at exo charts, I really, really dislike seeing these kinds of candles right here, these hanging mans, right at the top of the uptrend. I mean, oftentimes like they really do not sit well with me, and they often lead to sell-offs. Here's your, doji, your hanging man right here. This one is only after one green candle, but still, I hate this candle, even after like 1 or 2 green bullish candles. Okay. So this is why, again, I'm just watching the price action develop and see what we're going to build towards, if we're going to smash up higher, or if we're going to sell off more, or what, right? So for now, I'm just going to trade level to level. I'm going to start taking profit inside that 88.28 area, like I've stated before. And then if I need to look for shorts, I'll look for shorts, okay? Let's see here. I think that's pretty much it, folks. The 5-minute charts, okay. Chalky, however you pronounce this, CH4LKIE. I do not pay attention to bearish divergence on such short time frames. Please do not, please do not look at those charts and trade off that. They will more often than not lead to losses, okay? Stick to, 1 hour, 4 hour, and you will definitely see a good and better strike rate for your trading improve, okay? So we've talked about exo charts real quick. We've talked about the BTC analysis. I really don't want to go through the alt analysis right now. I may do a video later through the day or in the evening. Long, short positioning. I explained this if you want to rewatch the video. And I think I definitely talked about controlling ego and emotions in the market, micro and macro structures. So thanks to Travis, we were able to look at that 21 EMA as well as that 618 fib. And, again, folks, in this community, I really do want to sort of give a tap on the back of people who are always asking questions and wanting to learn and strive. And even if you are on the opposite side of the position as me, or you think that, hey, I said this yesterday and now you're doing the opposite, why? I will never take it as, you criticizing me or anything. It's actually very healthy for you to ask these questions. And I don't have thin skin, okay? I'm always going to do my best to answer your questions And I'm really happy that, Crypto Knight Clark, especially over here, he pointed out that, hey, he watched my video from yesterday, and this structure was showing me perfect signs of a long, which I literally talked about. So if I just left my bids out overnight, I would have been filled in my long right here because it was a perfect, right, turnaround, retest of that area and broke up, perfectly. I literally talked about this entire scenario just last night. And so, like I said, I am human and I am fallible, and my mistakes, I often lead to, smaller mistakes for the most part. And so, I did want to show you guys my loss. It's really not a significant loss, to be honest, and, not trying to brag or anything. Last week I walked away with, almost 3-4 times the gain of this. So I'm not really concerned, but I wanted to show this as a loss nonetheless, right? So, the point is, in these markets, you will have mistakes being made, but you don't want to be adamant to the point where you do not feel like this market is going your way. It's rather that the market is telling you, hey, just flip the other way and you'll just be fine. And that's, kind of what we're doing right now as we approach, the key areas that have been broken. They've turned key resistance levels into support. So I'm definitely going to long. I mean, I don't see a point of shorting this until I see maybe this point right here being hammered into or rejected, okay? And by that point, I'll take my profit and then I'll flip short, okay? But until then, I'm going to sort of hold off and see how the market is looking, okay? And I'm positioned long, all right? Okay, folks, I think that's pretty much it. Cup and handle, okay. No, this is, I don't think this is a cup and handle, by the way. Someone else asked this question again yesterday. Cup and handles are more rounded and clear like that. This right here with this thing in the middle, this is at best a W bottom, and I would not call this a cup and handle. Okay, I mean, you could just simply call this a W bottom, right? There's nothing wrong with that. There's your first bottom right here, creates your first, high in the middle, your second bottom, which is your W, and then boom. Okay, this is also a separate bullish pattern. Okay, so don't call this a cup and handle because it's not. All right, like I said, cup and handles are typically more rounded in their movement. You don't have big sort of microstructure movements inside that cup like that. It's fairly more rounded. All right, so let's call this a nice W bottom. Okay. All righty, folks. Thank you so much for watching. I hope you guys learned a lot, especially the kind of person that I am in the markets, outside the markets. It really did bug me today that I did not follow my own game plan. It's, honestly, it's really not like me. I had a clear game plan laid out, and I should have gone long down here especially, or right here. And the fact that I kept shorting twice, burned me to 2 times, causing me a loss of, a good 0.6, 0.7 BTC, right? Whereas I could have just gone long following my laid out plan, and I would have been pretty happy for the rest of the day. Okay, but anyway, let's not reminisce too much on the mistakes. Let's keep moving forward in the market. I am positioned long, and let's make some money through the rest of the day, all right? Thank you so much, folks. Cheers and have a good rest of the Monday. I'll keep y'all updated. And thank you again for being such an awesome community. And I'll talk to y'all soon. All right. Cheers.